Good morning, investors and traders. And in today's analysis, we'll be talking about Bitcoin's crash, which happened a few weeks back. But after the lackluster weekend, what does it mean for Bitcoin price action? Where are we going to go? Are we going to see the repeat of 2017? That is what we'll be discussing. As always, bit of a disclaimer right in front of you. If you have any further questions, feel free to ask them. Now, folks, the big question really for investors and traders is that are we going to see a repeat of something that we've experienced back in 2017? And what I really sort of mean by that is when the prices sort of went all the way to here back in 2017, and then we saw this massive drop in Bitcoin price. So from 19,000 it went all the way to nearly 4,000, and this was, folks, about nearly 75 to 80% drop in Bitcoin price from its all-time high. Now the question really is, are we going to see the repeat of the same thing? Are we going to see Bitcoin prices, because they have dropped more than half, nearly half from their all-time high of 65,000 to all the way to 34,000? And only a few weeks back we saw the prices dropping all the way to 30,000 sort of a price level is. Now the question really is, as I've mentioned, are we going to see these prices continue to fall? And that is what we'll be discovering, and that's what exactly we'll be talking about in this video. Now, a bit about myself. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience during this time period. I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America, and currently providing services to our trade as a chief market analyst. Now, before we answer that question, what we're going to do is we're going to analyze the price, and we're going to see what are the price action indicators, what the price indicators are really telling us. Now, first of all, we have three different moving averages on the chart. That is your 200-day simple moving average, then your 50-day simple moving average, and lastly your 100-day simple moving average. Now, the purpose of these moving averages is that institutions, smart money, really pays attention to that, because as long as the price continues to trade above these lines, above these moving averages, institutions are more likely to buy them. The moment it starts to fall below it, that is when we start to see a massive sort of a retracement in them, or even a big sell-off. So as you can see, the price broke below the 50-day simple moving average. It came towards this 100-day simple moving average, and then we saw a retracement, meaning a move back towards the upside. But then when the price started to break below the 100-day simple moving 50-day simple moving average right over here, then it was a very clear indication for us that the price only broke below the 50-day simple moving average over here. Now it is breaking below the 50-day simple moving average once again, and very quickly we are likely to see even bigger price sell-off. And then right over here, the price broke below the 100-day simple moving average, just like how it did over here. But because it happened so quickly, at this particular point we had an indication that the prices are going to see a lot more adverse price action. And then in addition to that, right over here we also saw the 50-day simple moving average crossing below the 100-day simple moving average, and at that time that was a further confirmation that this price action, which started weakness, we started over here, which was confirmed over here, and then another signal came over here, and the final signal came over here, confirmed that now the price action is going to go much lower. And then look what happened. The price challenged the 200-day simple moving average, but it couldn't really sort of stay above that one, and then it continued to move lower from that one. And then what we experienced was that the price continued to move to the downside, and then it there was a retracement. The retracement happened from this sort of a price level which we mentioned in our previous video. The link for that is right on the top. Click on that, and then you will see when the price came into this area for the first time, we mentioned that the price is likely to bounce back up from this area, and then which it did. Now the price is clearly coming back into this area of support, which is right again the same area. Now the question really is for investors and traders, are we going to see the crash of 2017 as I've explained to you earlier? Are we going to see that? Now, of course, bear with me. I will explain that really how that is going to be happening, or whether that whether we're going to see that. But before I do that, it is important for us to emphasize with the 200-day simple moving average and what is happening over here. Now, with the 200-day simple moving average, this was a further confirmation when the price stopped just ahead of the 200-day simple moving average that the price doesn't have the momentum to continue to move to the upside. So far, what we could clearly see that the price is down by nearly 50%. The price is trading below all the important moving averages, and the price has failed to move back above the 200-day simple moving average. And all of this confirms that the price is very, very weak. Now, guys, of course, if you like the content, please smash that like button and also subscribe and hit the bell icon. And that is because markets do change, and that means you need to be notified the moment we upload the new video so that you have the most up-to-date information. Now, the 75% crash in this one is really going to be if we reduce the price of 65,000 by literally by 70%. What do you think that price level is? That price level is really in around that 19,000, and that 19,000 is sitting right over here. I am speaking of this particular area. So let me highlight that area on the chart where we will see that 75,000 sort of a price level. Because at this price, what we could see is that the price literally dropped by 75%. If it happens, that's what it is. Because when the price previously was at 19,000 or 20,000, it dropped to 4,000. That was a 75% drop. Now, that 75% drop means the price is going to come towards the 20,000 or 19,000. However, before it does that, what we are likely to see is a price visiting this particular area of support, which is right over here. Meaning, if the price breaks below this area, then we are likely to see the price coming into this area of support, which is running from 24 to 21,000 sort of a price level. And at that point, what we can really say is that the price is more likely to find much, much, much better sort of a support level. Now, if we compare that on a weekly time frame, this is the area still above the 100-week moving average. This area right coming over here near 29,000 is in line with the 50-week moving average, and this area over here is above that the 100-week moving average. But this 100-week moving average is trading where the 75% drop from its all-time peak is really going to happen. Or whether that is going to happen or not, I mean, we hope not, certainly not, because if we look at the RSI over here, I mean, this is the area that we are looking at by this line, because this is that 75% drop in terms of that. But price has stayed above that. The price now with the recent trend also shows that the RSI is still holding on to its strength. So meaning we could still see potentially more strength coming here. All right, folks, that's all for now, and I'll come back with more updates as the price continues to perform from here. And then if we see the price possibility of a price breaking from here, then we will have another video, and you will only get the notification of that if you are subscribed. Once again, if you like it, smash that like button. Thank you.